The stock for Ondas Holdings, Inc., ticker symbol ONDS, is currently trading at $7.52 per share, marking a plus 13.94% gain in the intraday session today, Friday, November 15, 2025, which is a significant continuation of the positive momentum established after their recent earnings announcement. Now, most people tracking ONDS right now, especially after seeing the stock catapult from the mid-$6 range, are focused squarely on the headline numbers, the massive year-over-year revenue surge and the subsequent Analyst upgrade by Oppenheimer to Outperform with a $12 price target. That's the surface-level expectation, a clear earnings beat translating into a sharp price spike. The deeper, more compelling reality, though, is found not just in the size of the Q3 revenue at $10.1 million, which blew past estimates, but in the company's decisive pivot to its Ondas Autonomous Systems, OAS division. The unappreciated insight here is that the raised full-year revenue guidance to at least $36 million is a powerful signal that the market is finally recognizing the shift in business mix and the critical nature of the defense and security contracts the OAS segment is securing, effectively sidelining the slower-moving Ondas network side for the near-term growth narrative. This isn't just a bump in the road, it looks like a material re-rating based on a new high-growth revenue stream that is much more tied to urgent, government-backed autonomous drone and counter-UAS spending. The common understanding, the general expectation investors have held about Ondas for quite some time, has been one of a slow-burn technology company largely dependent on the lengthy deployment cycle of its core rail network communication systems. For years, the story was about the massive but distant potential of a wide-area broadband network for the rail industry, a prospect that has always been high-cost, multi-year, and prone to delays. This created a tension where the promise was huge, but the reality of quarterly results often fell short of investor patience. The stock has been a highly speculative play, trading in a volatile range. It's seen a 52-week low of $0.57 and a high of $11.70, which illustrates the extreme variance in market belief. What's fundamentally changing the narrative now, forcing the audience to rethink, is the spectacular and unexpected performance of the OAS segment, driven by the acquisition of American Robotics and its subsequent strategic additions such as Sentrycs, which specialize in counter-UAS technology. The reality is that Ondas is no longer just a rail tech play. It is rapidly transforming into a defense-adjacent, autonomous system supplier, and that carries an entirely different and much more explosive growth multiple in today's geopolitical climate. This contrarian angle that the old network business is simply foundational, while the new autonomous systems business is the true growth catalyst, is what demands a deeper look. Drilling into the recent stock movement, the current surge is a direct response to the Q3 earnings report released earlier this week. The stock opened sharply higher yesterday and has maintained that momentum, pushing volume well above its 30-day average, suggesting strong accumulation. This isn't just retail enthusiasm. The institutional activity reports, while often delayed, have already shown a significant uptick in accumulation over the past year, with major institutional investors like Vanguard Group and BlackRock Inc., alongside various others, building substantial positions. These large players are clearly betting on the long-term execution of the OAS strategy. We've seen this pattern before with high-growth tech stocks, where a fundamental business shift, especially one into a high-demand sector like defense or AI-powered hardware, causes a rapid reevaluation of the company's valuation metrics. For Ondas, the market is quickly moving from pricing it as a low-margin hardware and network service provider to a high-potential autonomous defense technology name. The stock's massive day range from $6.10 to $7.86 shows the extreme volatility and active trading from both short-term traders capitalizing on the news and long-term investors entering the position. This volatility is a double-edged sword. It offers fantastic short-term trading opportunities, but also introduces high risk for those without conviction in the fundamental change. The technical charts are confirming this shift, with the price moving above key moving averages, signaling what analysts are calling a golden crossover, a strong bullish indicator for a continued upward trend, especially given the substantially increased volume acting as confirmation. This kind of breakout technical pattern, supported by robust earnings and guidance, is what often pushes a stock from a speculative micro-cap position into a more serious small-cap growth story. Beyond the immediate market swings, it is vital to understand the fundamental business model that underpins this action. Ondas Holdings Inc. operates through two segments, Ondas Networks and Ondas Autonomous Systems, OAS. Ondas Networks focuses on developing and deploying the FullMAX software-defined radio platform, which is a private wireless communication standard designed for mission-critical industrial markets, primarily rail and utilities. The big contract here is the deployment with BNSF Railway, which is substantial but unfolds over a long time frame. OAS, on the other hand, is the company's Autonomous Systems division, born primarily from the American Robotics acquisition. This segment offers fully autonomous FAA-approved drone-in-a-box systems like the Scout system for industrial data collection, inspection, and security, as well as Counter-UAS and defense-related solutions, including the Iron Drone Raider and systems from recent acquisitions like Sentrycs, which specialize in Counter-UAS technology. The business model for Ondas Networks is project-based product sales and service revenue. The OAS model is moving towards recurring revenue from data and software services, which is what the market favors for higher valuations, especially when coupled with the high-margin, high-urgency demand from defense and homeland security customers. The most recent quarter's performance demonstrates this latter segment is dominating the growth story, with OAS revenue contributing the lion's share of the impressive year-over-year increase, growing by hundreds of %. The high operating expenses and net loss are still a weakness, a common issue for early-stage growth companies, but the narrative is shifting from when will they be profitable to how fast can they scale this new high-growth business. This shift in perspective is what fundamentally drives the stock price. When we consider the future outlook, the expectation versus reality framing becomes even more crucial. The general market expectation is that Ondas will continue to execute on the BNSF contract and slowly grow its rail business while the OAS side chugs along. The reality that the stock price is discounting is the sheer speed and strategic nature of the OAS expansion. The lifted revenue guidance to at least $36 million for 2025 is a conservative estimate given the nature of defense contracts and the speed of their recent M&A activity, which is rapidly stacking the deck with cutting-edge counter-UAS and AI-powered sensing technology. The potential catalysts include securing additional large-scale multi-year contracts with government or critical infrastructure entities for their autonomous drone and counter-UAS systems, as well as the successful integration of its recent acquisitions, which is expected to yield synergies in technology and cross-selling opportunities across defense markets in the U.S., Europe, and the Middle East. The long-term success of the FullMAX platform in the rail industry remains a foundational opportunity, but the near-term focus is decidedly on the drone and counter-drone side. The primary risk, which always serves as a counterweight to explosive growth potential in small-cap tech, is execution. This company is managing two complex technology businesses simultaneously, integrating multiple acquisitions and dealing with significant cash burn. Their dependence on raising capital through stock issuance has been a factor in the past, leading to shareholder dilution, and any hiccup in achieving the revenue and margin targets could lead to a quick correction given the stock's current momentum-driven price. The defense and autonomous systems market is also highly competitive, including behemoths like Lockheed Martin and smaller, agile firms. Ondas needs to prove its technological advantage, particularly with its autonomous systems, is sustainable and that it can convert its backlog into profitable revenue at scale. The regulatory landscape, especially around drone operations and counter-UAS technology, also poses a continuous risk, although their current FAA approval is a major competitive advantage. For those of you who are watching this stock and considering whether to enter or add to a position, the analysis of risk is critical. I'm genuinely curious about your personal assessment of the two business segments. Comment below and tell me whether you think Ondas Networks, rail, or Ondas Autonomous Systems, drones/defense, is the greater value driver for Ondas Holdings, Inc. over the next 3 years. Do you think the government and defense contracts are driving the stock, like what happened with some parts of the NVIDIA stock surge in its early days when defense and AI started to converge? Or is the slow and steady revenue of the rail network the real long-term anchor? Looking at where we started, the prevailing expectation was that Ondas was a story of gradual progress in the utility and rail sector, a classic infrastructure play. The immediate reality, delivered by a shock and awe Q3 earnings report and a sharp analyst upgrade, is that the company has successfully engineered a high-growth pivot into the much more urgent and dynamic autonomous defense sector. This shift fundamentally alters the ceiling for ONDS stock. The central insight is that this is no longer